Hi everyone, today let's talk about retail sales, then we'll get into all the data and charts. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So retail sales jumped a lot, 1%, much better than expected, and we also got initial jobless claims, a decrease of 7,000 there. So markets were super positive on this, 1% versus the 0.3 expectation, and then initial jobless claims, like I mentioned, better than expected there as well. Retail sales ex auto increased 0.4%, better than 0.1 expected, and this is already after we got that good inflation data on Tuesday and Wednesday, and you can see advanced retail sales, very high level there at 615 billion, and that is way higher than we were in the pandemic, and it's been grinding higher basically since April of 2022. And overall, this is soothing the concerns related to a potential recession coming. I still think that recession could come, but this is making markets think that it's probably not coming, at least in the short term. Looking at fear and greed for the 15th, you can see 33 versus a 26 yesterday. Markets went straight up all day, and the fear and greed indicator reflected that. You can see momentum back into greed, absolutely massive there. Strength and breadth still hovering. Strength has been tapering, moving actually inverse to the rest of markets. Pretty interesting there. But breadth has been moving higher, and I'm sure it's much higher today on the regular charts. And then put call ratio trending lower, but still in fear. Pretty interesting there. And volatility cratering, getting below the 50 EMA. Everything we expected to happen is continuing to happen. And bonds also still hovering in extreme fear. Moving over to the economic calendar here, you can see all of the data came in really good. So core retail 0.4 versus 0.1, headline number 1% like we talked about versus the 0.4 expectation. Previous number was revised down just a little bit, but you can see how bad it was, minus 0.2 all the way up to a 1, so very strong there. Imports, exports, all better than expected. Philly Fed did actually come in quite weak there at minus 0.7 versus the 5.4 expected, but markets didn't seem to care about that at all. And overall, very good. And then you can see Atlanta Fed GDP also came in pretty weak at 2.4. And then Fed balance sheet actually increased a little bit by 3 billion. And then looking at tomorrow, we do have some inflation data potential. We do have Michigan inflation data and then Atlanta Fed GDP for Q3. Nothing crazy to close out the Friday. Moving over to Max Pain. Max Pain is at 536. Way below where we are now at 552.89. The call wall is 550, so we're still expecting a little bit of a pullback into the 547, 548 area. That'd be about 0.5%, maybe 0.75% lower from current price. Top of the puts is basically right where we are, so that would be the top of markets, at least in my opinion. And then total options, 3.2 million or so. Put call ratio still very high at 0.3, so not expecting markets to crater, but there is quite a bit of room to the downside and not a ton to the upside. So based on Max Pain, risk is to the downside. Looking at the SPY charts here, you can see first candle massive, immediately just continued on, straight up candles. First down candle on the hourly was the after hours candle. So straight craziness to the upside, 1.71%, gapped right through the level we were at 544, gapped right through 550, and now 554.87 is the next level. If that level breaks, 560's up there. Obviously, I don't think we're going to see anything near that based on what we saw on Max Pain. It doesn't seem like we have that kind of volume coming in here. Volume has been relatively low. Momentum still good, RSI still good, all the indicators are still good, but we are absolutely extended after this massive move from the 511s all the way up to the 550s. Looking at the Tasty charts, you can see just how extended we are. Upper ATR is at 548.12. And we are at 552, almost 553. We are right here at the highs, going back to the end of July 31st. Wicked that high multiple times before we had that massive sell-off, so that we're right back to there. We'll see if we can hold these levels or push through them. Definitely going to be some major resistance there, in my opinion. And then looking at that hourly chart, we pushed right to that upper ATR band. We knew we had that room. We hit it. Volume came in right at the end of the session, which is not super great. Could be selling going into the end of the session, meaning we might see a little bit of a pullback. ATR trailing stop is at 549. We'll see how it plays, but that could be the zone to watch. 548, 549. You also got the 21 EMA on the hourly sitting there at 548.73. Moving over to the NASDAQ, you can see very similar thesis, 2.5% on the day. Straight up on the first candle, continued up all day. We did have a break at the 1 o'clock candle, sideways choppy from there. You can see just a little bit of selling after hours. Volume on the last candle was massive, and that was a doji candle, so that's not super exciting either. Again, a little bit of a pullback would make sense based on the Max Pain charts, but everything continues to look super bullish. And you can see here on the daily chart, broke all the levels. 471.93 was the most recent, broke the 55 EMA, which was the price target. And now we're pushing back to those highs from 1 August. We'll see if we can get there, maybe even push to that gap fill all the way from 23 July. The close from that candle was 480.62, which would be another $6 or so higher from here. And then looking at the Tasty charts here, you can see we are super extended, way above that upper ATR at 470.11, 8 EMA sitting all the way down at 467.10, ATR trailing stops all the way down at 461.71, so definitely extended. Momentum flipped to bearish here, which is concerning. Volume is still not huge. And then looking at the hourly chart, really the same thesis, still extended. Did push to the level, which was a little bit more than I expected. Upper ATR there was at 470.26, and that's where we pushed a little bit above that, and then we ended up going mostly sideways, and you can see the 8 EMA all the way up at that upper ATR band, the same one that we saw here back on the 13th, and then after that we got basically 2 days of sideways choppy action because we were so extended. So we'll see if that happens again. Sideways choppy for the next couple days, certainly possible. And then you can see here, huge volume on that last candle. And then we got 2 follow-on candles to the downside. Definitely extended in the short term, definitely a little bit concerning. Moving over to the Russell and the Dow, both of these were obviously strong, 2.59 and 1.45. Momentum swinging to bullish, RSI crossing above. Good volume there on the daily chart. So probably headed to the 21, sitting at 213.68. That's only a little bit higher. We're currently at 212.12, and then above that, if we broke, the next level would be 215.42. Seems like that could happen. Still getting a pretty powerful move off of this most recent base. And then looking at the Dow, also rocketing higher. Trend line sitting there at 407. Seems like we might hit that tomorrow, 408. Momentum and RSI still super bullish. If those area breaks, your next areas of resistance would be these previous highs up around 411. Moving over to the Mag 7, you can see we broke 465.08. Strong push on the day, 2.42, down a smidgen after hours, but nothing crazy. Momentum still bullish, RSI still bullish. If we push to that next trend, that would be up around 272.40. I don't know if we're going to get there, but at least it's within striking range now. The move on the day was $6.27, and that would be basically what we needed again to get to this next level. So seems a little extended, but it could do it again. Moving over to Apple and Microsoft here, you can see Apple 1.35 gapped and then dojied. Interesting. We're right at these highs back here from the end of July, beginning of August. We'll see if that zone breaks. Let's go ahead and add a level there at 124.36, right at that previous high. And then if we were to go get this gap fill, that would be all the way back at 234.85. And that was the gap down from the 16th. So interesting structure here. Doesn't look quite the same as Microsoft. Microsoft actually looked pretty good on the day, up 1%, but it's stuck right at that 144 EMA. Momentum and RSI still bullish. If I had to pick between the two, Microsoft actually might be the better play here. Looking to push to that 428.88 area. Apple structurally looks better, but Microsoft hasn't quite recovered as strongly as the rest of markets yet. Moving over to Tesla and NVIDIA, these continue the massive runs, 6.34% and 4.05%. Tesla didn't really participate yesterday, but it made up for all of that and then some on the day, pushing right to the level 214. That's what we talked about as being the price target after Tuesday. Once we gapped above the level 203.80, then 214 was back within sight. 22 EMA sitting there, momentum swinging to bullish. This seems like it has some more legs, so Tesla might be the place to be tomorrow. And then looking at NVIDIA, still pushing for that 125.17 level. Once the 55 broke here, that was the next price target, and then we'll see what happens after that. Does it still have legs? Seems possible, but that's the next critical zone. Moving over to Meta and Amazon. Meta was up 2%, Amazon 4.4%. Again, similar to Tesla, underperformed yesterday, right at that 200, and then gapped and rallied right through the level 174.23, right through the VWAP and the 21 EMA, all the way headed towards that 144 at 179.39. That would be my next price target, but this seems to be accelerating here. So interestingly, some of these stocks are accelerating. Some of them are hitting some major resistance. We'll see if this can continue into tomorrow's session. Moving over to staples and discretionary. Staples popping 1%, finally getting through that 79.90 level. Super critical. Hit the trend line here and then pulled back slightly on the day. This is very close to those all-time highs now. All-time highs for staples is 81.34, and we are at 80.29. 79, so getting very, very close to that level. 79.90 is now your support, momentum bullish, RSI bullish, and then discretionaries. With Amazon and Tesla jumping, you should expect that this jumped, and sure enough it did. Trend line sitting right there is resistance, got above the 55 EMA. It's right at the highly traded zone, which is interesting. Massive gap, momentum bullish, RSI bullish. And if this pushes through the trend line here, 185.36 would be your next level, or about another 2% higher. Moving over to oil and gas and transports, both of these jumped quite a lot today, 1.8% and 1.71% respectively, momentum bullish, RSI bullish. We liked both of these going into today, and sure enough, they are strong again. Transports did find a little bit of resistance up around the 65, 98, 66 area. 200 SMA sitting there as support now at 66.47. And then oil and gas, price targets 140.88. I think we're going to hit that. Touch the 21 EMA, should see at least a wick to that level, and then we'll see what happens from there. Are we going to pull back, or are we going to push through it right to this next level up around 143.58? Moving over to breadth, this is the concern here. So breadth has rocketed higher, so it still looks bullish, but we are starting to get very close to those extended levels. You can see here, 20-day breadth tends to top out between that 75 and 85 area, and we're already almost at 70. So 1 to 2 more days of bullishness like we've been seeing is going to put us back into that zone. And then if that downtrend resumes, then we're going to see a rapid acceleration to the downside, in my opinion. So we'll see how it plays. Something to watch for. Critical area here, 75 to 80, and then looking at 50-day breadth. If this is going to continue this lower high trend, go ahead and extend that. Add that trend line here. You can see right in this zone is going to be that resistance. That's at 68.66, right at my level. Momentum says we could push through there. RSI says we can push through there. But this is going to be interesting. Definitely a critical zone there. So far, it's been 2 lower highs and 2 lower lows. If we reject from here, there is a ton of downside potential. And we could get into those zones that I was talking about before, down around that 32 area. So something to consider. Critical zone, if it pushes through here, everything's all gravy. But if it rejects from here, it's going to be a disaster. Moving over to yields. Yields actually caught a pretty strong move here today. Interesting. You got a low, higher low setup on yields. Momentum back to bullish on both of these. RSI's breaking higher. Seems like yields might be moving a little bit higher over the next couple days. We'll see how much they can recover. 21 EMA sitting there at 4.18. on the 2-year, and then for the 10-year sitting at 4.02. They continue to trade within a very tight range, but with those recession woes eased a little bit here today, 2-year recovering quite a bit stronger, and we continue to stay inverted, which is crazy, the longest inversion in history. Moving over to bonds, J&K up 0.09. We're right at this high back from 31 July. Critical zone there. If it's going to break, it needs to do it right now. 96.50 is the next level, so about 75 cents higher. And surprisingly, even with the push here today, TLT was only down 0.81. Momentum did break down, RSI down a little bit. Still holding the zone, bounced off that 96.50 level, so we'll see how it plays. But this is a low, a high, lower high setup now, so that's a little bit concerning. Maybe we see a little bit more follow through to the downside. Let's go ahead and extend out some of these trend lines here. That would give you a low down around maybe 94.60, 94.70, right in that zone here. Hard to say exactly. Would like to see it hold that if we even got that low. Moving over to volatility, both of these continuing to crater here as we expected. Momentum still bearish, RSI still bearish. Everything looks weak on the move index, and then the VIX. Now we're getting into some interesting zones. The low of the day was 1477. The level was 1470. So interesting zone. If it's going to bounce, this could be a critical zone, a place to do it. Momentum and RSI still very bearish, but this is a massive spike. To not get at least a minor secondary spike would be unusual. You can see here we've had massive spikes before. Usually you hold the level and push. Similarly here, hold the level and push. You usually get at least 2 spikes on these kind of moves. You've seen it a bunch of times before, and so far we haven't seen it. This was just kind of a massive up move. Now we're seeing the down move, waiting to see what happens from there. Moving over to my accounts, I made money, almost 900 on the day, which is good, but not nearly as good as it could be. Markets were super aggressive, and a lot of that was pre-market, so I couldn't take advantage of all of that, and I should have been more aggressive during the day. I did put on some puts on the Qs, which helped make some money. Rolled those up and then took them off at the end of the session. Overall, though, plenty of money left in these covered calls. You can see my max profit on this position's all the way up just short of 472. And you can see we're at 474. So I should only be in about a $200 loss there. And I'm at 700. So some of that money is going to come in over the next couple days. We are certainly extended. So I wanted to stay a little bit protected. This is pretty deep in the money, $12 below current price. So we'll see how it plays out. Just being careful. I can continue to roll this up as I need to, try to take advantage of it. I don't think we're going to see massive spikes like we did over the last couple days again. And just like we saw on the charts, 2 days of sideways action would actually make sense. And I could be patient and roll these up. And I could sell puts into any kind of intraday rallies. And then looking at the Russell, same move here, 209 for $4 credit. So that puts my max profit there at 213. And I'm actually only 5 days out on that. So still got another dollar potential. Made a little bit of money on that, rolled up. The Russell wasn't nearly as strong, but overall, not a bad day. Still plenty of protection, being cautious as we are certainly extended on the hourly and the 4-hour charts. Let me know down in the comments section what you thought of retail sales. Did it justify such a strong move? Where are we going next in markets? Can this overextension continue? And like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.